A Sydney housing frenzy. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee, let's look at this article from Domain. Sydney open house inspection numbers jump as FOMO sets in again, the experts say. Well, we look at the media, it is just pushing more and more FOMO, more fear of missing out. And that's the thing. If it's founded, if it's not founded, but if you keep hearing it again and again, that's how people are going to respond. It's no different to a pump and dump. Look at Dogecoin. Look at GameStop. There's always going to be people left holding the bags. So, anyone house hunting in Sydney recently who thought there's a lot more competition this side of Christmas would be exactly right, by quite a measure. The number of people attending open houses across the city last month was up by more than a third, year on year, new data shows, as a fear of missing out sets in for house hunters. Against a backdrop of rapidly rising prices, agents are being inundated with buyer interest, reporting long queues at open home inspections, dozens of pre-auction offers, and feverish bidding that is pushing some sale prices hundreds of thousands of dollars above vendor expectations, because we only hear about all the good things. Attendance at open homes across the city was up 14% year on year in the 4th weeks of the 31st of January, including internal domain data shows, and up 217% over the previous 4 weeks, which covered the quieter holiday period. Australia's just had our first recession in 28 years. You've got huge proportions of the workforce of people employed supported by JobKeeper, which is going to disappear. We have mortgage holidays in place, and the government is just flooding money to first home buyers to get people into property. People are worried, understandably. They want to get in, they want to get a house. And frankly, I see exactly where they're coming from. The long-term consequences of this constant just dependency on property is going to be a continued focus on property. The problem with property, guys, is it's not that special. It's not that advanced. It's just the location, essentially, that you're buying. And so long as demand continues, well, demand will be there. We don't have any political will to allow correction, which means why bother? Why innovate? Why start another business? Just get into property. It's sad in a way. And we're going to have more of a divide between those that are in and those that are not in property. While inspections for houses were up 36.7% year on year, foot traffic through units was down 12.9% over the same period. So you might be able to get a bargain unit, although I don't know if I'd be brave enough to get one in Sydney with all the construction issues. And it's not just Sydney, it's everywhere, guys. These things are built, well, a lot of them were constructed when we had a tremendous overheating of that sector, so it's going to be a big problem. Buyer demand had started strong this year, but houses were attracting significantly more buyers than units, said Domain senior research analyst Nicola Powell. It really speaks to the two-speed market. We see housing and unit prices moving in different directions, Dr. Powell said. While Sydney's median house price reached a record high of $1.2 million last quarter, jumping 6.7% last year, unit prices were still down 0.3% over the year at a median of $729,000. Strong buyer activity on weekends was also reflective of soaring lending figures, Dr. Powell said, which was fueling higher prices. And as we saw in another article, the RBA doesn't care. They don't care about this. They just want to get more jobs. And this is the consequence of the mess they're creating. We're not in a free market, everyone. We're in a centrally planned market. Not to the extent of others, but it isn't truly free. And as I said, I can't see the political will here in Australia. I think we need to advocate for a shift of the Overton window for more of a focus on individual responsibility and freedoms, and then that can permeate through to government and Reserve Bank interventions into the economy. But I can't see that happening for a generation or two. Anna Boniface, who recently purchased on the North Shore, was grateful to have finally bought after missing out on several auctions. I mean, it becomes exhausting. It really must become exhausting. The pace is relentless. Every 6 months that you're looking, prices go up, she said. There are hordes of people showing up. It actually creates a lot of anxiety. There are just so many people looking for exactly what you're looking for, and someone has got to have the deepest pockets to buy it, she said. Sellers know it's their market. It's not a question of what this property is worth. That all goes out the door, she said. It's what people are willing to pay with all that competition. It's overheating. You're getting FOMO combined with low interest rates, with insane low interest rates, and low rates that have been promised for years now. So it's our version of you can't bet against the Fed. You can't bet against the Reserve Bank. Miss Boniface's buyer's agent, OH Property Group principal Henry Steer, said there was strong buyer competition across all price segments, with the rise of remote working also sparking interest or increased demand in outer areas. The irony, though, is that this mass migration towards the outer suburbs where people thought they would get bang for buck is having the complete opposite effect because it's really pushing up prices. Low interest rates and relaxed lending were also driving prices higher, Ms. Steer said, with some buyers returning to the bank to increase their budget by $100,000 to $200,000 without any change to employment. Wow. There you go. See? That's the candle-on effect there, guys. That's a bubble. That is a bubble right there. I mean, why would you sit your money in the bank? You put it in the stock market, you put it in property, at least then you'll get something for it. You got to ride the bubble because they don't care about it. They don't care. And it's going to be younger generations are going to suffer. People who haven't been able to get into housing are going to suffer. Other buyers were making rash decisions to beat the competition and failing to carry out due diligence. There's this frenzied atmosphere because if they don't get it now, they will miss out again, Miss Steer said, adding she'd recently seen a fully renovated property snapped up despite a pest inspection report finding a history of extensive termite damage. Well, it may be a demo, guys. They may be buying it to demolish it. We're talking to some friends who are looking for land. We said, you know, Rachel's going, you may not find land. You may need to buy something to demolish. That may be what you have to do. Bress Whitney, Gleb's Luke Grosvenor, said buyers were broadening their search to try to secure a home. They're shopping to their price point rather than geographically, he said. Our open house attendees have been really strong. I've had multiple FaceTime appointments, walking people through from interstate and overseas, willing to buy sight unseen to get their foot in the door before things take off, he added. Well, here's the question. Will it continue once mortgage holidays end, JobKeeper disappears, the job seeker bonus disappears? That's the question. Will this frenzy continue when those interventions are removed? Or will it become an election issue and we have more intervention? So then you just have more money flooding the market. Future tax burdens for people in the future. Don't worry about them. No one cares. So you lock your money into something that might actually maintain a value and has a use, because your cash is just going to deplete in value. The property curator, principal, buyer's agent, Brendan Clark, said the level of buyer demand was reminiscent of that seen back in 2017 boom. There are multiple offers coming through beforehand. That FOMO has really kicked in. If you go to any open, the line goes around the block because of social distancing. There are just stacks of people, Mr. Clark said. It's a different style of boom. I'd argue it's a lot more in your face. But he urged buyers to be cautious when trying to outbid the competition, as big inspection numbers do not necessarily translate into strong buyer interest on auction day. There are lots of people coming who don't have finance ready. If they don't have the right information, they can pull the trigger on a house just to get in, he said. Mr. Clark, who works mainly in the inner west, said houses were attracting more interest than units, and established walk-up blocks were more popular than new high-rise buildings. I mean, that's sensible. If you're going to go in a unit, you want a little 3-story walk-up where the potential risks are much less, where the construction isn't as complicated. So there we have it, everyone. A Sydney housing frenzy. FOMO just fueling it. What do you reckon? Do you think it'll keep going? Do you think there's any way to address these housing bubbles that we have here in Australia? Are we going to see change in our generation? As always, thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join the channel on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, have a great day, and I will see you all next time. Bye for now.